Shrikant says, good afternoon. I've heard about laddered covered call strategies, selling covered calls over a number of months. Could you help me understand if it could be analyzed with power options? Well, I don't have a search that could really do that. Okay, I don't have a search for you that can really do that. We could set up a search for the types of stocks that you want in a covered call strategy. Let me just do that. I'm going to do, yeah, won't use weeklies, Shrikant. I'm going to try to use standard monthlies, okay? So we're just going to look at July first. And I'm going to put in some basic criteria. For July, I want a good 2% if assigned. I want a good 5% downside protection. That's in the money now. So let's do this. Let's do 5% if assigned. Kind of high. We'll go out of the money. And I want at least a 3% downside protection. Strikes out of the money, let's just say greater than 2% out of the money or more. Delta, I'm not going to worry about yet, but I want some volume. And I want some open interest as well. Bid price doesn't matter. Probability doesn't really matter. I'm going to keep the implied volatilities as less than 1. And now, basic stock criteria, Shrikant, excuse me. Average stock volume, let's say at least 750,000 shares per day. Historical volatility, I probably don't want that to be greater than 0.9. I won't use the RSI, but yeah, I'm going to want a stock trading above a 20 or 50-day moving average. Stock price range for a covered call, what matches your account? Let's say 15 to 150. Why not? And let's just look for positive earnings per share growth and maybe no earnings between now and expiration. Market cap, I'll just put mid to large cap, 2,500 there. All right. So let me submit this. Probably going to get a lot of results. Okay, excuse me, 32 results. Now, I'm sorry, folks. What does the laddering mean? Probably go with a 27. What it means is that Shrikant is planning on buying maybe 500 shares or 1,000 shares of stock. And at 500 shares, he might sell one July 27th call, minimum premium of $1. Probably should have put that in. I will put that in. Okay, minimum premium of $1. Okay, there we go. All right. So in this case, we still have about a 5% downside protection, a 5.8 potential, 12.6% potential return if assigned at 27. But I'm going to have 500 shares and just one call. Okay, so here's my 1 month out search. I could save it this way, 1 month out covered calls for laddering. Let's just do that. Now, not every stock that matches this criteria is necessarily going to match for August, because some might have earnings between now and August expiration, but not between now and July expiration. I might take that out, because if you're going month by month, Shrikant, you're going to be crossing an expiration. And the other trick is that we're going to focus on SunPower, SPWR. Let me write that down. SPWR, see if it comes up. But not every cycle is going to be represented, Shrikant. And what I mean by that is that we might have a July series. And, we do have weeklies, of course. So you could use this as weeklies. We have a July series, good. We have an August, we have a September. This one's not too bad. Some right now, you might not see the August series come out until Monday morning, because we haven't crossed that line yet. In other words, they had a June series and the July series. Then they might have a September and then a December. We don't have an October or a November yet. But what do we know about the strike prices? Let me go to July, cited standard expiration. Let me put that on hold. And now let's change it to August. Well, I know now, if I'm expecting growth, I can go further out of the money, still get at least that $1 premium, with still having a 5% downside protection. So you might not want to use this. What I'm saying here is that based on what your goals are, Shrikant, for this thing, we're going to change it. We're going to put in a minimum premium of $1.25 for this position. Okay, I'm going to do this 2 ways. But I'm going to use $1.25, and we're not going to allow it to go more than probably 20% out of the money. So let's change my search a little bit. I want a minimum $1.25 net credit and I'm not going to go more than 20% out of the money in this case. Now, I should still see my sun power. I have both the 26 and the 27. That's great. Okay. Now, I'm just focusing on this because it was the first one that came up. Any of these could be possibilities as well, but this is what we're going to look at. Now, we wanted at least the minimum 5% downside protection. We know we're going to get more premium going further out in time. So what I could do now is change this to August, but say, you know what? Now I want a minimum 5% downside protection, minimum percent if assigned at 10. Now, I am going to have to remove this earnings date between now and expiration. I apologize for that. But see, what am I doing? I'm increasing the returns for the second month. Sorry, folks. Okay. So now there's the August 27, which is 9 and 17%. You could keep the same strikes, but if you wanted to go further to ladder this, which I think is the true definition, you're going out in time and higher strikes to step up, we could do the 28, or we could look at the 30 here. So we'd have the 27 and the 30. Another way to do all of this, if you know a stock that you want to consider laddering, is we can take out all of those stock criteria I just mentioned. Oh, of course, and I would save this maybe as second month ladder in that case with the higher downside protection, Shrikant, and the higher percent return if assigned. But let's clean out all the stock filters. Okay, and the options here we're going to leave as is. But I'm going to select all expirations and now go into fundamentals and just search for SPWR. Okay, so now we have 19 total results, starting with the shorter term. I'm sorry. We're going to change the sort. Instead of percent if unchanged, highest to lowest, I'm going to do it lowest to highest. So we'll see the near term months first, going further out. Okay, so now we've got July. And then you've got the weeklies thrown in here too. But now we've got our September series at the 30. My August at the 30. So I'd probably have to go higher in September. I might want to have the 27 July and then the 30 August, or maybe the 28 or 29 August. Yeah. Why are you not seeing, here's a question, why are you not seeing the 28 or 29? That's likely because of this requirement. The 28 or 29 strike for SPWR might not have an open interest of 10, or it might not have traded any contracts today. Let's skew those out. I'm still going to look for a greater than 0 open interest, by the way. Okay, let's go ahead and submit that. Okay, yeah, so now we've got more Julys that didn't have the 10 open interest or didn't have the volume. Here's some open interest at 7. Actually, they're all pretty good. There's the volume today that was probably affecting those and why they didn't show up originally. So yeah, we've got the July 27. And then we go further down here, and there's the August 30. And then I might see where the September 30 is still there. That's good. But do I have a further September? I don't have a September higher than 30. Okay. So yeah, you might want to try to stagger it by using the July 27 in this case with single strikes, then look at the August 28th, and then of course maybe look at the September 29. So there's 2 ways to search by it. You can create a month-by-month search. As I mentioned, we could save it as 1 month out CC for laddering, 2 month out, 3 month out. And again, you'll see the same stocks that match your same stock criteria. You won't use the earnings date between now and expiration because eventually you're going to miss one because you're going to cross an earnings date. Or just create a template of the options criteria that you want, minimum return, minimum percent if assigned, range out of the money, for example, minimum bid price you want for each one, maybe some liquidity, open interest, and volume, and then use the fundamental screen to look for SPWR, the stock that you want. These aren't your search criteria, Shrikant, I know. So that's what you could do. You could do it both ways in those cases, to screen by month, create a search month by month looking at the different stocks, or create the base criteria screen for all expirations and use the fundamentals field to look for SPWR. Now, I've never done this before, so we're going to learn together. I don't know if the profit and loss chart would handle it. Let's go back, and I'm going to do it Let me close some of these out here. We're going to go back and we're going to do it the way I might have started. Okay, I'm sorry. Let me go back to the search. And I want our new search, 1 month out cover calls for laddering. And I am going to focus on the 27 to give myself a little bit of upside. And I'm just going to go to the profit and loss chart. Okay, so we know the max return is 12.6%. We're getting $1.39 in premium. So our cost base is going to drop down to $23.98. Let's change this. Let's make this 500 shares. Now, let's add in another option. Let's add in the August. 28, let's go 29 at about 180. 50 cents higher premium. We're going to sell one, right? Yep. Okay, so now this looks a little skewed. Why does this look skewed? Because the profit and loss chart is still looking at the near-term expiration, the July expiration. And then we can just continue to do this. I'm going to try to be as fast as we did August. I want to do a September, what, 30, we said? Yeah. Okay, then we're going to add in the December 31 if it's still a dollar. Oh, it is. Let's go to the 32. And then January, I like the 35. Okay. One, two, three, four, five. Good. Okay, so now we've got 5 contracts sold. Your original cost basis was $12,000, but you've gained another about $1,000 in premium against it, a little bit more than $1,000 to knock the cost basis down in this case. Now, the max profit, if the stock is trading right at 27 in this case, and that's just talking about July 16th expiration, is $3,632 at 31%. That is taking into account the time value. Actually, I think no, it's got to be much higher. The max return, as you're seeing, it's going to be much higher. At 27, that's not the max profit. I'm sorry, it's going to be way up here, probably at about 40. And what's happening in that case? Well, most of the options are all going to more of an intrinsic value. And of course, this is just the first month. So there you go. All of these are losing, but you're gaining 7,315 there. You'd be assigned here at 27 and lose 100 shares, and you'd expect to be assigned soon there too. That's too big of a jump to expect, of course, over the next time period. But this is just another way to skin a cat. The laddering concept, not something I personally use, Shrikant, but walk through how I would show a customer, how I would show you if we were on a coaching session, how I would set up the search tool to identify that, either creating the same search screen with the same stock technicals I'm interested in my cover call, looking month by month by month and saving each individual search, or if I've already identified the stock, changing it to all expirations, not using any other stock filters since I know the stock, and then just putting in the base options criteria and then considering which positions match, again, minimum requirements I have for option bid price, range out of the money, basic volume, open interest as well, and then using the fundamentals just to screen one stock at a time. Those are the 2 ways to do it. You can see it on the profit and loss chart as we saw. Build the position based on the 5 months of laddering against the 500 shares of stock, and then analyze the what-if scenarios at July expiration. Then what happens if that's assigned and I now have 400 shares left with these remaining 4? What would happen after that?